Well, hello everyone, and hope you're all having a great evening. This is Wednesday Night Live, and we're broadcasting live here from San Diego, California. And thanks for joining us. My name is Jean McDowell with TradersCoach.com, and we are thrilled to see you here. So before we do get started, I wanted to do a couple of housekeeping items. And Haley, good to hear that the sound is good. First thing I wanted to let you know is that we've got a couple of features you'll be using during the event tonight. The first is the questions area. And if you can hear me and see the screen, just type actually, why don't you type in the city or the country or wherever you're watching from in the questions area. That will give me a little idea of where everybody's from. And while you are all doing that, I wanted you to know that that's the area you can type in questions to our speaker for this evening. All right, well, we've got folks from all around. Hey there, Mike from Toronto, good to see you, and Sam from Las Vegas. Haley, you're from Phoenix in Arizona. And hi there, System Wizard from Philadelphia, Pennsylvania. Good to have you all here, and we're going to have some fun tonight. So the next feature I want to show you is the chat area. And I just posted a little message there in the chat area. If you can see that message, it's actually the traderscoach.com website. If you can see that, just give me a Y or a yes in the questions area to let me know that that is working and you found it. Mike, thanks for letting me know. And of course, I'd like to invite you to visit us at the traderscoach.com website. Lots of great education there for traders and investors, and we'd of course love to have you come by and visit. And hey there, Neil, good to see you here tonight. Haven't seen you in a while. So, all right, tonight we've got a really great presentation by Bennett McDowell. And he's going to be talking to us about his Trading Success Pie. And Bennett is founder of TradersCoach.com way back in 1998. He's an expert in technical analysis, money management, Elliott wave techniques, and trading psychology. And he's got 4 best-selling books out, A Trader's Money Management System, The Art of Trading, Survival Guide for Traders, and of course his latest book, Elliott Wave Techniques Simplified by McGraw-Hill. And I guess without further ado, I will turn it over to you, Bennett.
Okay, Jean, thanks so much. Great to be here, everybody. Welcome. Great turnout tonight. So let me just scoot right along here and get started. First thing we have to go over, of course, is the presentation disclaimer. How exciting, right? But of course, we have to do this for every webinar and basically explain and state that there's risk in trading. But, you know, like I always say, without the risk, there's what? Everybody should know this by now. No opportunity, right? So the two go hand in hand. And, you know, I think that's true with anything we do. Okay, there's risk pretty much in most things we do, but without that risk, there's never any opportunity. So sometimes you have to take the risk. What we try to do in trading is actually estimate the risk and protect ourselves from significant risk. So we're going to talk about that a little bit today as well. All right, check out our books. They're all over Amazon, Barnes & Noble, anywhere you go shopping. So we've got books from money management to the trading system, to running your business as a hedge fund, to Elliott Wave, which is a form of technical analysis. And we're going to be working on one more book in the upcoming years as well. All right, so a little story here, a little bit about me, a little bit about where I'm coming from. You know, we've been doing this now for quite some time, been trading since the 1980s, but we actually started TradersCoach.com in the late 1990s. And originally it was basically a very basic website. I happened to be running like a little hedge fund for a wirehouse where we were putting a whole bunch of our wealthy clients' assets, a certain percentage of them, with their approval, of course, into a trading account and running that. And the TradersCoach.com website was a way for me to communicate and tell them what I was doing. And so they would tune in, and it was a very basic chat service. Well, that developed, and as software and technology improved, we were able to improve the website to where it is today, where it's a portal for, not only trading education, but these trading software tools and webinars like you're seeing now, and et cetera. So the technology has really blossomed and made a huge difference in our business, as well as many other businesses as well. But we've done trade shows. I've done the New York Traders Expo. I've done all the trading challenges at various parts across the country. These photos in front of you now happens to be our booth that we had, where we actually were doing live trading at the booth. A lot of fun. And, we do this. I'll be going to Australia, for example, this May, and doing the same thing over there as well. So we do a lot of presentations, but our goal really has been not only to trade the markets, but to teach trading and to offer the software tools. And the funny thing is that if you had asked me back in the 1990s if I would be in education like I am today, I would have told you no, because I had no idea. Because again, going back to the time period of the 1990s, traderscoach.com was really a portal for educating people that I was managing money for. And then what they did is they started asking, well, how can you do this? Can you teach me to do this? And that's where we went down the education route. So kind of an interesting story, but again, I think it's very tied to all the technology increases that we've had as well. We've won many stocks and commodities Reader's Choice Awards. There's Ed Schramm awarding me the Stocks and Commodities Reader Choice Award for a variety of our different software products. We also have an A+ rating at the Better Business Bureau, and you can check that out on our website. We have a little link you can go to and check us out, which is quite good considering we've been in business so long. We really try to do the right thing by our clients and customers all the time. They come first. All right, a little bit more about me personally now. Growing up, I grew up in Long Island, New York, did a lot of sailing and competitive sailing. I did many Bermuda races. I hung around the America's Cup for a while. I have a private pilot's license. I played guitar. I did martial arts. I was a naval officer, worked on Wall Street. So I did all these things. And the funny thing is that every one of these things that I did brought me to where I am today. And when I developed my trading approach, believe it or not, I'm going to talk a little bit about this a little later on, things like being a private pilot, playing guitar, all right, things I learned in ocean sailing and so forth, have all brought me certain elements that worked into a trading approach. And so you're going to find this very interesting when I talk about this. I also was in real estate in a very big way in the 1980s on Long Island. I owned millions of dollars of rental property, about 22 units at the time. And I found out, and I'll explain this a little later, that real estate was good, but it also was bad. And I'm going to tell you why I segued out of the real estate industry into trading the financial markets. Founded traderscoach.com in 1998, pretty much when designing websites were really starting just to be able to be done, so to speak. All right, I love trading to this day. It's the greatest business in the world, but I also love being with my family, and trading allows me to do that, which is kind of cool. All right, so that's kind of my story. There I am in my martial arts. I've done Oyama karate back in New York, and then I've done Taekwondo out here, and now at 62, kind of tapering off a little bit. The hip joints and so forth don't move quite as quick as they used to. All right, so here are some pictures throughout my career here, sailing up in the upper left side. How many sailors out there? Anybody like sailing or flying airplanes or doing anything like that? It's a lot of fun. And here I am. This is the picture of America's Cup right here where my cursor is. That's Dennis Conner. That's me on the stern. And that's us preparing and getting ready for trials on that day. That's in a ship on our way to Westpac, getting ready. I think we just finished departing the dock, and that's why I was in my whites at that time, playing guitar down there, flying airplanes, and my family here. So there's the whole gambit of me in a nutshell there. All right, so what's your story? That's the kind of interesting thing. It's not about me. It's more about what is your story. Where have you been? Where are you now? where are you going, and how will you get there? If you are in a situation where you love trading or you love what you're doing, let's talk a little bit about trading here. Where have you been? Are you successful? You're still struggling? Things going okay, better, but not quite great? Kind of get a feel for where you are. You don't have to answer this in the questions window. I certainly don't expect that because that's kind of personal. But also, where do you want to go? Do you want to go to the next level? We're going to try to help you get to the next level. And I think this particular event today, this presentation, is going to kind of outline that a little bit for you. That's what we're hoping. Now, you heard me mention why trading and not real estate. Well, I'll tell you, real estate has some advantages, especially when the market's going up so much. But what I found in the 1980s was that you could have a ton of real estate, but if you hit recessionary times, all right, you're in trouble, especially if you're leveraged. Because the problem is that you can flip properties, fix them up and flip them, but when they don't sell, then you're forced to rent them. And during tough times, rents aren't as high as you want them to be. And chances are, if you're buying these things and flipping them and you haven't owned them too long, guess what? Your carrying costs are going to be probably a little bit higher than what your rent is going to be, especially with the taxes today, I can imagine. But this is even back then. And so that's what happened to me. I found out that, I had millions of dollars of real estate and I had to borrow money for lunch because it was all tied up in illiquid assets. And very difficult, leveraged illiquid assets. So real estate is great when the market's going up and you can move these things. Not so great if you get caught leveraged with too much property. So you got to be really careful with real estate. If you buy right and you have a good market for a number of years and then it heads into recession, okay, well, you might be able to struggle it out. But in most cases, pretty tough. Now, retail businesses aren't much better because in recessionary times, you don't sell much, but you still have all the bills. So that's the difficult part with both real estate and recessionary issues. I found trading to give me absolute financial freedom because once you know how to do it, you can make money in bullish or bearish markets. And with the technology today, which is incredible, you can do it from your home. So you don't have to go to an office or anything else, and you really don't need any help. All right, all you need is a great internet connection and the software that's available today. You do have to have the education, that's important, but it's still something you can do on your own. That's a real big difference. But you have to master the trading pie. So here is the trading pie, which we talked about as the heading of our topic tonight. So when we talk about the trading pie, we got a lot of slices to look at here. All right. Most people focus on this area here, and that is timing entries and trading systems. And what they do is they tend to focus on finding something that somebody says is going to be the greatest, latest thing. And what happens is they get home, they start trading, and they find there's a little bit more to it than just entries and exits, because a lot of little things come into play. And that's what these slices represent. So you really have to master all these slices. So let's just take them one by one, and then later in the presentation, we're going to go into more details. All right, so first thing is scanning the markets. You've got over 10,000 markets out there. So how are you going to find the right ones to pick, right? So you got to have a way in which you are led to the markets that are moving. You don't want to be stuck in dead markets. You don't want to be stuck in markets that have already gone up so much that you're getting in late. How many times does that happen to everybody, right? You get in, you do a sector analysis, sector looks good, all the stocks have risen, so you jump in because it's bullish, then what happens? It reverses and you get stopped out. So getting in late to markets is not a very good way of doing it either. All right, but scanning, we're going to help you with scanning. So that's one part of the pie. The next part is timing, and this is where a trading system is important, along with risk control to determine your trade size. So that's really important. All right, target zones. When you take a trade, where do you expect it to go, and how are you doing that? What kind of analysis are you using to do that? So target zones is important, and the risk to reward will determine if the trade is worth taking. Really important. Money management and record keeping. You know, when you enter a trade, we have a very great piece of software called the Trader's Assistant, where we enter in the open trade, enter in the potential stop, the reasons for taking the trade, and we do all this because we may be in that trade for a little while, like a couple days, maybe a couple weeks, maybe it's a long-term trade, a couple of 6 months. So we want to have that information at our fingertips so we know why we went into the trade, where our stop is, and also when we close out of the trade, we can analyze it. You know, at the end of the quarter, we like to go through all our closed trades and see what worked, what didn't, why we took the trade, etc. All right, the next thing to do is trade management. So while the trade is currently active, you know, how do you manage it? How do you move your stops? You know, should you scale out, things like this, or should you add into the trend some more? Sometimes we do that. So that becomes an important piece of the pie. Psychology. How many people have talked their way out of a perfectly good trade, right? How many times have you done that? You're in a trade. Actually, sometimes the profitable trades can screw you up a lot more than the ones that working against you, because you start to think, well, geez, should I get out of the trade? I'm not really, my trading system says to stay in, but you know, I'm a little fearful because the last time I did this, it stock, you know, I took all my profit back. So you tend to get screwed up sometimes on psychology. So that has to be something you have to master so you stay with your structured trading approach. And I'm going to put another little pie piece. This is a new piece of pie that I'm putting in. Fitness, all right, which covers physical, mental, and emotional fitness. And, you know, I think it's important because as traders, you know, we tend to sit behind our monitors an awful lot during the day. So I think it's really important to get away from that. And I think some type of fitness program is important as well, and also balance in your life. So you have to have that piece of the pie in order to, so you stay really objective in the markets. I think that's really important. So this is a trading pie. I think it's not, you know, there's more slices probably than this, but I think this covers the major slices that we want you to become proficient in. So take a minute, take a look at that and see, just mentally go through it on your own and see, okay, 1, I'm good at, 2, maybe I could use some improvement, 3, okay, 4, go through there and see which areas may be ones of weakness for you, and strengths as well. But, you know, we want to work on your weaknesses and fix those. So think about that. All right, so let's break it down and go into a little bit more detail. All right, finding trades, scanning the market. All right, there's many ways in which we find trades. All right, we have scanning software, and I'll show you that in a minute. But you can also take a look. Some people use fundamentals, news events, seasonality to lead you to the market. So for example, you know, if oil is in play, or if something's going on around the world that puts a certain sector in play, look at the stocks in those sectors for sure, and use your technical analysis, your trading approach, your rules to see about the timing. Because sometimes, you know, I'll look at things that are in play and they really aren't good trades yet. So you need to analyze that. Just don't jump into trades based off news events. We have something called the MORE service. That stands for the Market Opportunity Report Service, where we actually scan the market for you and look for trading setups like this one. All right, for example, we'll give you the entry position based off the technical analysis we do, and give you when to get out as well. We also, too, scan the markets through our scanners in the MORE service, but we also have the scanners available for purchase, too. And this is, we have 3 types of scanners that we use to scan the markets. One's called the Trade Confirmer, the other one's the Elliott Wave, and the other one's the Turbo Scanner. So we have these 3 scanners available, and you can check them out on our website, but they do a tremendous job of sorting through the thousands and thousands of stocks, Forex markets, futures, whatever you trade, to find the ones that make sense. And then we have client support sessions every week that are included with any purchase of our software, where you can come and actually, I'll teach you how to use them. So pretty cool stuff. All right, one of the ones that I love to show is this scan. We have a scan just for bracketed markets. And a lot of times, if you know anything about how trends break out of bracketed markets, usually the longer the bracket, the longer that they're kind of bottoming or in this channeling formation, when they break out, the trends can be huge. So there's a certain time frame we look for in terms of how many price bars in the bracketed market we scan for, and then of course the breakout. And usually what we want to do is not be in the market this time, but when it breaks out of the channel, that's when we want to be in the market. You don't want to have your money sitting too idle, okay, because then it's not earning anything. We have a couple ways if you get caught in an idle market, what to do, and we can certainly teach you that. But for the most part, when we scan, we like to look at breakouts. And we also like to actually, when we find a bottoming market like this, we don't dismiss it. We put it on a watch list because we want to keep an eye on it, because we know big trends come from bracketed markets. And so even though it's not a good time now to get in, when it breaks, it will be. And so a watch list, if we build a watch list of a lot of these bracketed markets, then the more we put in that watch list, the faster the opportunities appear when they start breaking. So you have a constant supply of trades coming, but once you build your watch list, it's kind of like if you're in sales, you ever hear the word pipeline? In order to be successful in sales, you have to have a lot of people in your pipeline. All right. And so what happens is the more people you have in the pipeline, the more chances somebody's going to buy. If you don't have a lot of people in the pipeline, okay, you're going to have to wait a long time to sell something. Same thing with this. We want to have a watch list of a lot of potential trades ready to go. That way we always have a trade. All right. And here's another example. I mean, you can scan. It's amazing how many bracketed markets there are out there and how you can just build a watch list of that. We have more things we like to build, but that just gives you an example. They're out there, hundreds of them at any given time. All right, so once you find the market to trade, then the next thing to do, the next slice of the pie is timing. When do you get in? Where do you put your exit? This we rely on software, and we have the ART or Applied Reality Trading software. Many of you are familiar with that. That is the software that looks at fractals in the markets. It looks at price patterns. It's looking at momentum. All the realities and truths of the market is what the ART software is designed to do. And I've been doing this for so long that basically ART and all the software tools I've designed here are a culmination of what I have found work best in the market for trading success. So the ART system does a great job of that. It takes into account the volatility of the price involvement, because it isolates resistance and support lines within the triangles, and also of course within that are your resistance levels and support levels for entries and exits. So it's really great for that. We also like to use multi-time frame analysis too when we enter the market. That's part of timing, and I'll show you a little example of that. All right, so when I designed my trading approach, all right, one of the things that I kept in mind is the fact that timing was so very important, but also it has to work on all time frames in all markets. That was really important. And so I don't know if you're familiar with something called symmetry, but market symmetry comes into play here when you're designing a trading approach. So I'll go over that in just a little bit as well. The other thing with designing a trading system, there's the science part of it, there's the software part. But there's also the part that has to take into account all the pieces of the trading pie, right? Okay, so psychology is not really a science. It's not a software, but it is something you have to master in order to implement the software correctly. And that's really important. So that's a piece of the pie that we help you work on. Now, the software tools that we use, we call the Ultimate Trading System. And here's the ART system over here. And you're going to see this on a chart very shortly. Then we have the OWL, PTF, and TLM. Then we also have the risk reward calculator that calculates our trade size on each and every trade, as well as the risk to reward. All right, again, another important piece of the trading pie. And then we have our scanners down below. So these things that you see on this chart, these boxes, these products, these are the tools that help formulate the trading pie. And what we try to do when we design our system is focus, all right, on a set of tools that can be applied on any market in any time frame. Very important for not only analyzing a whole variety of different types of markets, but also important in doing multi-time frame analysis, which I'm going to show you in just a moment. All right, so that falls under the category of symmetry and fractal analysis. Okay, so price symmetry basically in fractals are price patterns that repeat themselves at different scales in the markets. They appear in many natural systems as well. When you talk about fractals, it's a change in behavior. And that is also apparent not only in the markets, but in our personalities, our moods, our psychology. You can see it in nature in a whole variety of different ways. Fractals, the way trees grow, they will grow a certain distance and then turn and grow another way because they're always following the path of least resistance. So that's all part of fractalization. All right, so let me just show you an example of market symmetry. Can anybody out there tell me what market this is or what time frame this is? And if anybody can, you're doing good because you basically can't. All right, it's impossible for you to know what time frame or market this is. There's no way of knowing. And why is that? Because the same price patterns appear on all time frames and markets. How about this one? Can you tell me which one that is? And of course, the answer is no again, right? All right, so this really hammers home the point that when you remove the X and Y axis, it's really difficult to tell what market and time frame it is. And yet, if you use a trading system and design it so your entries and exits are based off price patterns that you see on different time frames and markets, then it can be applied on any market and any time frame. So that's the point here. And here's an example of our trading tools on 3 market time frames right here. So for example, this happens to be stock symbol RAD, which is Rite Aid. And over here is the weekly chart. So this would be the longer term trend. Over here is the daily chart. This would be the intermediate trend. And then we have the short term trend, which is the 60-minute chart. Now it's all the same market, all the same software tools, and yet we're using it on 3 different time frames for timing. Okay, for example, if we wanted to go long on this particular time frame, all right, we want to check the lower time frame to see if the momentum is bearish or bullish. Same thing with what's the long-term time frame. So this helps us with our timing and pick the right time frame to trade. Okay, all right, so and it doesn't matter. I'll go over what our software tools work on. This happens to be eSignal, but it works on TradeStation, NinjaTrader, MultiCharts 12, MetaTrader 4 and 5 for you Forex traders, and TradeStation as well. All right, same exact situation on all time frames. All right, here's another example. Here it is in the Forex market. Again, if I remove the X-Y axis, you would know this is the Forex market, okay? So it's kind of interesting. But again, the way in which we trade is that the pyramids are looking at price patterns, and this is a resistance area that's pointing down, so the pyramid always points in the direction of the trend. Our stop goes 1 tick above the flat part of the triangles, which forms the resistance level. And we look at the momentum when these particular patterns form and pick the best pyramids or best price patterns to put the pyramids on. And then what we do is we trail our stops by moving them right down the pyramids. So you would be still short this with your stop where this line is, even though you got in way up here. And then we use these things down here, which are our OWL, PTF, and TLM indicators as a checklist. So if we want to go short, we don't want the OWL to be green, so it's red, check. All right. We don't want to see any green on the PTF, check. All right. If the trend line is yellow or red, that's a check. So everything substantiates and confirms a short trade initiated by the ART software. Okay, kind of cool. All right, so basically, when you get this hammered down, you're looking at price patterns, and then we're also using the indicators below to look at momentum and trend line identification to see if it confirms the signal. The more of these you have at the bottom in line with the signal, the higher the probability of the trade is. All right, let's move on. Target zones. Target zones are extremely important because without them, it's very difficult to figure out your risk to reward, right? Which is an important thing in risk control to determine if you should even take a trade. So when we talk about target zones, there's two main ways I like to calculate a target zone. One is using fibs, called Fibonacci's, and I use the retracements and extensions. And the other one is the risk to reward calculator that gives me the actual risk to reward. So let's just quickly take a look at a chart here. And here's a chart, for example, this was PAYX. This was on the Moore report. And this is what we call a PTF trade. Now, this focuses on using the PTF for establishing our target zone. So the target zone is one tick above the high on this price bar, because when the PTF turns green, it's very easy to use. This is the cool thing about this indicator. It's a kindergartner could use this. When it's green, you find the highest price bar in the green area, and there is a 75% probability that prices will eventually get above that high. All right. So in a case like this, we have a green pyramid, already a long position here. We're going to put our stop loss at the very bottom in the green area, and this would be our target zone. So the next thing to do, once you know that information, you know where the price is now, you know where the target zone is in terms of an exact price, and you know where your stop should be. So once you have that information, then you come over to this device called the risk to reward calculator, and it does two things actually. It calculates your trade size, and it also calculates the risk to reward, and the risk to reward is 2.65. So for me, part of my trading rules is that the risk to reward has to be 2 or greater for that to be taken. And this meets the requirements. And here's the trade size. So if you get stopped out, you'll only lose 2% of your account size. And based on my trading style, that's good. All right. And again, we tell you how to use all this stuff, but this is a very important tool, and it's the final litmus test before taking the trade, because you have to have a good risk to reward, and you have to know your trade size, because you have to use risk control. So that kind of answers that question. And here's actually what happened. This was just from this month's Moore service. So it went up there and hit the target zone. And in this example here, as soon as the PTF turns yellow, we exit, okay? So that's a scalp trade. That's not really a trend trade. That's a quick scalp trade. But there it is, okay? And the stop we used held as well. All right, so here's another Moore type of trade. This was a daily chart. This is based more on fibs now. We're using a fib extension for the target zone, and we're using a little Elliott wave, as you can see in here. And notice how prices came down to the fib retracement area. So you had a 3 here on the owl, a 4. Now the owl's going green again. We got a nice pyramid entry here. All right, and we use this as our target zone, 110.34. We come down here and put that into the target zone. That yields a risk to reward of 2.44, because prices were at 85.43 and our stop was at 75.31. All right, not hard. This is an example of structure. This is what everybody should be doing in terms of their flow. All right, look at how you analyze the market. Look at where your target zone is. Establish your stop. Calculate your risk to reward. Trade with the appropriate trade size. That's the science. Okay, that is the science. And you go with the indicators below here to confirm, and you're off and running. Okay, you're off and running. So that is a daily chart on Starbucks. And here's another one, Club. Okay, again, good entry here. We got bullishness down here, target zone here, risk to reward 2.99. Now, if the risk to reward is under 2, we don't take the trade. We pass. You know, I look at a lot of these. Every week we analyze the markets. You're looking at the ones that are good, but I discard the ones that aren't good. So there's, you know, you look through a number of them, and some of them just plain aren't, the risk reward's no good, okay? Even though you think it's going to be profitable, it's not worth taking the trade, because we want to make sure our winners win big and our losing trades are losing only 2%. So very important way in which we look at the markets. All right, money management, how to control your risk and so forth. The trade size calculator is built into the risk reward calculator, so that calculates the trade size. The trader's assistant, all right, is something that keeps track of our records and also our payoff ratio, calculates our win ratio, payoff ratio, and the percent to use in the risk to reward calculator. So what it's doing is it's looking at your closing trades and analyzing those for you. And it's a really slick piece of software. We could spend a whole hour talking just about the trader's assistant, but you always, as a trader, okay, should always know your win ratio and payoff ratio. So if I got in an elevator with you in a building, we were going up to the 5th floor, and I turned to you and I said, hey, trader, what is your win ratio and payoff ratio? You need to answer me before you get to the 5th floor. If you can't do that now, all right, you're not keeping good enough records. So you need to fix that. All right, here's an example, again, of using the risk to reward calculator and basically all the tools of the system. And basically we're using this pyramid. All right, we got our stop in place and our target zone. We didn't draw it in the Elliott wave, but if we did, it would probably be a 3, 4, and this would be a 5 target zone up here. All right, we're putting the account size in and the whole 9 yards, and this is what the calculations show. And again, it's that simple. And once you get used to doing that, it's as easy as 1, 2, 3. We even do this on a 2-minute time frame and a 5-minute time frame, because it's that quick once you get it down. All right, so trade management. All right, this is another interesting part of the pie. Now, trade management is basically a couple things here. One is trade management is after you've entered the trade, okay, how you manage it, you know, how structured you are. You have to have a structured plan on managing your trade, all right? So that's really important. You have to stick to your initial stop. Don't be changing your initial stop. Trailing stops you can move, but initial stops you can't, all right? And how do you scale out or scale into trends? That's all part of trade management, all right? Because if you don't have a structured plan in the markets, you're going to get eaten by these guys, okay? The sharks of the market, I call them. So you need to have a structured plan, or these guys are going to eat you alive. And the market is so good at finding your weakest emotional link. And if anybody's been trading long enough, they know exactly what I'm talking about. It's amazing, okay? You can be pretty squared away and get into a trade and literally talk yourself out of a trade because of fear and greed, okay? It's very interesting. And if you don't believe it, start trading without structure, and you'll probably be a mess in about a week, okay? All right, so you have to have a structured game plan, really, really important. And that means using initial stops, trailing your stops, all right? How do you do your exits? Let the market take you out of the market. Don't emotionally get out of the market, and don't trade your last trade. Have a structured approach so you're always trading the statistics, okay, not your emotions. Very, very important. And this is where our trading approach shines, because we're really big on not only the science of using the software tools, but also employing the right psychology and structure with the tools to form a complete trading approach, because most losing traders lack structure. When I look at a trader and they're not doing well, it's usually because they lack structure, and there's so many reasons you can lack structure. One of them can simply be there's so much darn information out there that you tend to try to use all of it and in using all of it, you've created chaos, okay? So you have to be a little bit more honed in your approach, and that's what we try to help you to do, all right? So just to review a little bit on structure, effective stop loss placement, both initial and trailing, all right? What percent to risk on each trade? You need to know that, and you need to calculate your trade size for every trade and your risk to reward, okay? You want to avoid the risk of ruin. Put the risk of ruin by using stops and calculating trade size and your risk to reward. You actually put the risk of ruin on your side instead of against you. Really important, because you also got to realize in trading that some losing trades are a normal part of trading. All right, you're not gonna win every trade, but you want to keep those losing trades minimal. And everybody says that, but they don't tell you how to do it. All right, we'll tell you how to do it. All right, so again, here's just an example of how our trading approach effectively uses key levels of support as per the pyramids and keeps you in the trend as long as possible. So if your initial stop loss is down here off your first entry on the left-hand side, we trail our stops up until we're finally stopped out over here, right here. Now, if you used a moving average or some other way of optimizing this, your moving average would probably kind of go maybe like this. And I can guarantee you most moving averages would take you out of this trend way too soon. So you got to be really careful. Now, notice we have some red signals in the opposite direction of the trend. These are scale out areas because the dominant trends are always identified by the P's and the minor signals have the MPs or are in the opposite direction of the P's. And we teach you how to use those for scaling out situations. And it depends on how much profit you have before you're allowed to use those. So again, structure, rules are structure. All right, so trading psychology is the next big portion we want to take a look at today, all right? And we have a lot of courses on trading psychology. We have a really good one, a home study course on that. We have one-on-one coaching. I can't tell you how many people on the coaching situation that I do. Really, literally, I coach with people around the world, and it's great because, again, with the technology today, I'm basically right there with them. I talk to them just like I'm talking to you. They have a mic. They can talk to me. They don't have a mic. They can use a phone. I can show them charts. They can show me their charts. I'm literally right in the same room. And that's how our coaching program works. And it's really super. We've been able to help a ton of people with not only their psychology, but getting the structure they need in their trading plan to be successful and go to the next level. We also are implementing San Diego summits now, where basically once a year, if you want to come to beautiful San Diego, and it is a beautiful place, come here, spend 3 days with me, and it's one-on-one, small group of people. We try to keep it to about 12 to 15 people, and it's a great group. And we are there together. You can bring your laptop, plug in, and take trades if you want while you're there. But the idea is we break into groups. We can have Forex traders, we can have stock traders, we can have futures traders. And the idea is that we go over the trades before you take them to see all the elements of structure. What's the target zone? Where's your stop? Does this trade make sense? Let's look at it using the ART system. Let's look at it in terms of risk to reward and trade size. All that's done before you take the trade. And believe me, when you start doing this together, by the end of the 3 days, you don't need me anymore. You can start doing this by yourself, all right? All right, but again, most people lack structure. And if you do not have a consistent game plan, it equals failure, all right? That's why so many people fail in the markets. They don't have all the pieces of the trading pie figured out. And instead of taking the time to figure it out, they just jump in with real money and lose it. All right, now last section here, we're almost done. Last section here is fitness, okay? So I'm gonna show you some pictures here in a minute, which are kind of interesting, all right? But you have to maintain your overall fitness, physical, mental, and emotional. Now, I'm gonna show you a picture of yours truly, and here I am. And my son's just about a year old there, but look how heavy I am. I'm about 240 pounds right there, okay? Now, the reason I'm showing you this is for a couple of reasons. One is this was not good for me, okay? I was tired a lot, didn't feel really healthy. I was behind the computer all the time. And I got to be honest with you, my performance, I didn't feel was as good as it should have been. And it was mainly, due to the weight, okay, at that time. So I set out to change, and I did. I had to work at it, just like I worked at trading, but I was determined. And so here's what I did. I lost 72 pounds, and there's my son, a little older, okay, and there I am. You wouldn't recognize me. Two different people. The reason I'm showing you this is change is possible, whether it's physically, mentally, emotionally, or with your trading. Change is possible, but you gotta want to do it, okay? And you gotta come up with a game plan to do it. And in order to lose this kind of weight, I had to implement the same structure, reasoning that I did with my trading, and it worked, okay? So I'm just showing you that. So if you're in any one of these particular areas, you may be in great shape, but you may be suffering in your structure of trading. Well, you can change that, okay? You may be in bad shape like I was, but if I can do it, you can do it. You can change, but you have to be willing to do it, okay? And I didn't say it would be easy, but you have to be willing to do it and create a structured plan. And for me, to lose this kind of weight was structure in diet and going structure in a fitness program, okay? And once I got into it, it really wasn't hard, but it was just following the plan, okay? A lot of losing weight is math, calories in, calories out, period. Good calories, bad calories. But it is an important part. And as you get older, all right, your diet is even more important or has a better results than going to the gym. Okay, I think going to the gym is really important for your heart and the whole 9 yards. But after, I think when you get over 60, it's 80% what you eat. Okay, that's just my own personal situation. So I can help you with that, okay, with coaching. A lot of people will take coaching and we'll work on that a little bit too, all right? So let me ask a couple people out there. Let me get you a little bit involved here. We're almost done. All right, what do you guys and gals out there think is the hardest part of trading for you, okay? And this is personal, okay? Sam, thank you. Appreciate that comment. He said, hell of a job, and I appreciate that. Okay, so what is tough for you guys and gals out there in trading? Type it in the questions. And there's no right or wrong answer here, all right? It's just that everybody's gonna have a little bit different twist on what's hard for them, all right? Bill's saying discipline, all right? Reluctant to use trailing stops, okay? System wizard, I like that. All right, very mysterious. All right, what else? Okay, what else? Mostly discipline, okay? Structure, okay, good, all right. That all comes under the same category. A lot of times your discipline has to be built, and we'll help you build it. You have to, we have a good way of doing that, so we can help you with that, all right? It's actually a phenomenal way. All right, risk to reward. Some people don't calculate the risk to reward, all right? So all these things can be solved. All right, and I think that same question piggies back onto the fact, why do you think most traders fail, right? Same reason, lack of discipline, all right, and failure to do what they need to do to be successful. And also too, I gotta tell you, a lot of people work hard at this, but a lot of people also don't realize all the pieces of the trading pie. So, sometimes it's not a matter of working harder, it's working smarter, okay? And this is kind of a cool little slide because it shows all the gears. I actually should put more gears in here, but it shows the gears here grinding together of all the things we talked about producing successful trader, but they all work together. In other words, the gears are meshed, they're married. And it's kind of like the trading pie. All the pieces of the pie are kind of need to be mastered together, okay, before you can be successful. All right, you have to have those worked out because our goal is to make money in both bull and bear markets. And I got to tell you, we're really lucky to be in a business like trading where we can make money in bad markets. You know, making money in easy markets, I mean, bull markets is kind of easy for the most part. But when the markets turn south, that's where people can have trouble. And not, you know, not only in trading, but in other businesses, especially. We're very fortunate that we have the kind of business where we can make, where there's opportunity in bad times. And, you know, there are now, you don't even have to buy real estate now because there are real estate REITs you can buy, things like that. All right. So you can just trade those if you want, but still be in the real estate market. Now, the last part of my presentation before I'm ending here, and I hope I'm not too long-winded here, but my last part of my presentation is just a couple personal things that I learned, okay, that I applied in my trading. And you may have similar things, but I'll just share them with you. All right, sailing for me, for example. What does sailing have to do with trading? Well, sailing taught me that the elements can throw anything at you at any time. All right. And I did a lot of ocean sailing, a lot of ocean racing. And what was interesting and what I thought was a pretty good thing is that, you know, when we're trading the markets, we can have fear creep into our opinions based on what we hear. All right. For example, how do you correlate that to trading, to sailing? Well, in sailing, we always set our sails to the reality of the environment. Okay. If the winds are 15 knots, that calls for a certain type of sail combination. The winds get up to 20, that calls for a different combination. The winds get to be around 40, 50, 60 knots, that's a whole different ball game, and we set our sails accordingly. Same thing with trading. Trade the realities of what the market is doing at that time. Now, if I'm sailing in the afternoon and it's a beautiful day and the winds are 15 to 20 knots, but there's a storm on the front, they're forecasted for tomorrow where it's going to be a full gale, all right? That doesn't mean I'm going to take my sails down today and get ready for the gale tomorrow. I'm going to wait, okay, until I start seeing the wind pick up. Same thing with trading. Just because you might be near a top doesn't mean you're at the top. So keep going until it changes. So that's what I learned from sailing. Okay, trade or sail the realities of the environment until they change. Then of course have the structure to know what to do and change. Okay, so that's one thing I learned from sailing. Let's take another one, guitar playing. Okay, when I learned to play guitar, one of the most important things it taught me was that I wasn't going to be a rock star tomorrow. Okay, the guitar is a very complicated instrument. You have to learn all the notes on the fretboard. You have to really, if you're going to play a solo, all right, and be any good out of it, you have to know what notes go with what chords and how to move around. And that takes years to learn that. All right, so that's what playing a musical instrument taught me. Things worthwhile take time. Same thing with trading. A lot of people, amazes me how many people come into trading and think, oh, I'll get this system on Friday, I'll learn it over the weekend, and I'll make tons of money on Monday. Doesn't work that quick, all right? You have to master the trading pie, just like you have to master musical theory in order to be good at it, okay? Same thing, all right? Final thing, flying and trading. What did flying teach me? Flying taught me, and I have an IFR rating, flying taught me that you have to rely on your instruments. Now, what does that have to do with trading? Well, when I'm trading the markets, I have to rely on my software tools. So if they're telling me more highs are coming, but everybody on the news says they're not, I trust my tools. Okay, that's what flying taught me. So it's kind of funny, and the reason I'm sharing these to you is because all these little things, all right, brought me to where I am today and brought me into how I trade the markets. And I'm sure many of you have little things like this out there as well, but they definitely apply, okay? So, and they're very good analogies, and these are some things I learned by doing these other things that I brought right in to designing my trading approach, okay? All right, so let me just, before we end, we're almost done here. Any questions out there? Any questions? Did you like the seminar today? Did you find it helpful? Any feedback you want to give me, feel free to type it in at any time in the questions window. Okay, so while you're doing that, I think, good. All right, glad. A lot of people got a lot out of it. That's great. Okay, that was the purpose. Okay. And again, trading and our, our weaknesses are very personal to each one of us, but try to see what they are and fix them. Okay. A couple more little things here. Okay, is that we've got a summit coming up, and we do this once a year, and we're going to work on all these pieces of the pie. So if you're struggling with any of this, all right, come to the summit. All right, you're going to get a tremendous amount of this, and I got to tell you, it's going to pay off in dividends. It's a small price to pay to hammer it all home. And again, we're going to be looking at live markets. You're going to be divided into small groups where you're going to be trading a certain particular market. All right, you can actually bring your laptops, trade for real if you want, but we're going to look at things, go through all the risk control, and really develop a game plan that you can use after you leave the summit. So it's March 19th, 20th, and the 23rd for 21st. So it's a Thursday, Friday, and Saturday. Markets are open Thursday and Friday. Saturday is a debrief and questions and all that kind of good stuff. Now, let me just throw up one more thing here, if I can find what I did with it. Let's go ahead and bring up, let me bring up a...
And while you're bringing that up, Ben, maybe I'll throw in a couple of
Sure.
thoughts. So we've got 2 spots left. I just had somebody sign up, so I've got 2 spots left. So I'd love to have you all, if you are interested, at least look at that page. I just put the link in the chat area. So click on that link so you can check it out. And of course, if you have questions, let me know.
Okay, good. Thank you, Jean. And here's the landing page. So this is what it looks like. All right, we got 2 days left on this. We want to fill it up. We only got a couple spots left, she said. So definitely, if you're interested, don't wait on it. It's going to be a lot of fun. I can't wait to meet all the people there. I love doing that. It's going to be great education. It's very intense. Okay, so get a good night's sleep before you arrive, because we're going to be hitting it pretty hard. But it's a great place. Here's the agenda. You can check out the agenda that we have scheduled for you when you're here. This is the hotel. It's got a really nice, Gina and I went over and looked at the rooms and everything. They've got like a little kitchenette in there, pool, the whole 9 yards. And this is just some more information for you. Here's a little outside area we've got planned to have a wine and cheese on the first night there, so I can say hello, get to know you a little bit. So check it out, all right? Plus, if you want to stay a little while longer, we have some people coming from far away that I know of that are actually going to make a week out of it. And here's some areas that we can help you go see that are kind of fun here, like the San Diego Zoo. You can go to the Coronado with the Hotel Del. It's a great place to go eat. You got the beaches, and if you want to go up into the mountains, the Julian area is very pretty up there. So a little bit of something for everybody, but it's all on this particular landing page. So that's the link Jean put up for you up there, okay?
And
all right,
also,
so that,
too, can I just throw one more thing in there?
Sure.
So if you're looking at that page, do me a favor and just notice that there is a savings code. So all you need to do is take that savings code and type it into the order form, and it saves you 30%. So actually, Bennett, if you want to show them,
where is
scroll
the
up.
savings code?
Okay, scroll up.
Up?
There you go. See where it says 30% off at
Here.
checkout.
Okay.
Use the promo code. It's basically 30%. And Ben, if you click the sign up now button, and then you type in that 30% and press apply, then that saves you a whole lot of money. So
wow, that's a good deal.
I know, I think that's why I've only got 2 spots left too, but it's a nice small group. It's only going to be 12 people.
Yep.
And I can tell you that the folks that are coming are really amazing. A lot of clients that we've had for a long time, like Vinko and his wife are coming, and they're going to be staying for a whole week.
So it's really not $2,397. It's really a lot less. It's like $1,600.
That's
Okay.
what I was trying to say. Yeah.
Glad you said that.
I
Okay,
know.
good. Very cool. All right, so that is it for today. All right, so and again, I want to thank everybody for coming. We had a great turnout. Now, listen, okay, the other thing too is, a lot of people come here for education, but you have to remember we have a whole suite of software tools that are phenomenal. So if you're looking for structure, that's the place to go as well. Okay, so don't forget that, and you can check out that on our website. All right, so thanks for attending, and we did record this, and so I guess the recording will be available a little bit later. But thank you so much, and thank you for all the nice comments also in the questions area. I'm glad you enjoyed the webinar because I certainly enjoyed being here as well. All right, thank you so much, everybody. Take care now, and I'll say bye-bye.
Have a great night, everybody.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors. We've developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It's because of our years of experience, attention to detail, and exceptional customer service that we're the right choice. Call us today.